Hi, I'm trading the ES on a 2000 tick chart with the 21 EMA. So price started in this overnight highs here, overnight lows here. Um, I did put them here for a bit, um, but then I ended up deciding to just leave them here after I saw that they reacted pretty well off of it. So I thought that it was pretty accurate. And then for down here, at first I had it like this, but then I ended up moving it like this, um, because it kind of does react off of it, and I think it's just more accurate. It's like two bounces here, but but it could be here. Either way, it gets you to the same area. So basically, let me zoom in. This trade, I watched this trade go by. Um, I was really urging to take it, but I got scared out of it. So basically, what we have here is this downtrend. We have a break, a couple attempts at a new low, fails, and then the EMA holds, and then we do make a new low. And so what I was thinking of it and why I was thinking that it looked alright as a short is because we have this uptrend right here, uptrend, break, first attempt higher, second attempt higher. And so two legs to new high, it makes a new high, and now after it makes a new high, it's likely to reverse, especially after two legs. So uptrend, break, two legs to new high, reversal, downtrend, break, expecting a new low. Even though it has two attempts right here, this is just a small attempt. It could get a second attempt. So, like if you zoom out and look at it on a bigger picture, it looks like downtrend, break, first attempt lower, second attempt lower. So you have to remember that when bigger trends need bigger attempts to play out, basically, is my point. So that's why I thought that was a good short, but I kind of got scared out of by this congestion, which it's not a big deal. It really isn't that big of a deal right there. But it happens. Sometimes you'll get scared out of a trade and you're like, ah, well, it's not even that bad, but it's whatever. So here's where I got my first trade. Um, so I did use a limit order. I got in one tick above this bear bar because what I did was it engulfed and then it triggered on the green bar, and then I put my limit order one tick above the um, this red bearish bar right here. And so that's where I got filled right there. And I got 3.25, 3.25 points. And so that was a reversal pattern. So we broke out of the lows of the day. This downtrend has a break, new low. So we can look to go long because the downtrend is out of play. We broke out. Most breakouts fail. It failed and it rushed above the EMA. The downtrend has a break, so we can expect prices to make a new high. The entry closes out of this short-term trend line, and it's a first entry short, second entry short failure. So reversal pattern after the downtrend played out after a breakout, rushing above the EMA. I think I think that looks really good. So then after this swing forms, we start to get this new uptrend, which I adjusted this uptrend as it went on throughout the day. Of course, you would have it more like this at first, but then I tried putting it, along here. Um, I still don't know exactly, because it could be a few different things, but I ended up just leaving it like this at the end of it. So anyway, we push up, get a little congestive. We don't get anything back to the EMA yet. So then here, first entry, new high, first entry, no entries. Those are way too big of bars. We have a push down, goes into a little range. We bounce off the key entry point, push higher. There's no entries again. And then we get this two-legged correction. It goes through the EMA and the trend line at the same time. So we have this massive leg down. Now, when an uptrend has a break, yes, you expect prices to make a new high, but when it just rushed down so fast like that, and so far down, um, I wouldn't be surprised if it didn't even attempt to play out. And so, if you started looking for shorts at this point, that probably wouldn't even be that bad. But either way, we pushed down. I was wanting to take something here to go short, but I couldn't quite find anything. I marked this right here because we do have a second entry short, um, but it does have this trend line working up, and it didn't reach the EMA, so that's reason not to take it, so I didn't take it. Here is my next trade. This is kind of, oh, and then, yeah, this trade right here, this last trade is kind of special trade. But, here, I almost got stopped out. It got really close. So, uptrend, break. Technically, we are still expecting a new high. We rush above the EMA. First entry short, second entry rushes above, and then it holds. Now, so yeah, it's a reversal pattern. I failed second entry. I do kind of see something wrong with it. Um, it isn't a very deep pullback that I'm entering on, and so that can cause problems. But yeah, it's just a first entry, not very deep pullback. So if it would, if this bar up here, say, went higher and then pulled back harder and closed way lower, that would have been excellent probably. But it's still not bad. It's a reversal pattern at an area that you expect a reversal anyway, because this uptrend is still expecting a new high. The downtrend is played out, and then you reverse from this downtrend. Um, you know, so I got filled. It came back pretty close to my stop. Ended up running higher, massively running higher. So I still feel good about it because I was very heavily correct because it shot up very high. But then we have a break, new high. So here we broke out of the overnight highs again. So we can expect that to fail again. And so we break out, most breakouts fail, the uptrend plays out with a break and a new high, and then it brings me to my last trade, which the reason that it has 8 tick stop right here, 16 tick target, because that's what I went for. So I've talked about in my last few videos, a lot of my trades have been getting a lot more than 1 to 1, because I always go for 1 to 1, but a lot of my trades will get more than that, and so I'm trying to figure out when exactly I can take them, and so I took another one today. And basically, the main reason I took it is because the main reason that I went for 1 to 2 is because the bar is so small. It's only 2 points. Um, these bars are like almost double size. I mean, this one's not double, but it's significantly bigger. Um, and especially this one. So I just decided, hey, it's a really, really small bar. It's at a really good area. Most breakouts fail. The main uptrend here played out with a break, new high, perfect area to reverse. Short-term uptrend also played out, rush below the EMA, lower high. And since it was so small, I decided to go for 1 to 2, just because so many of my trades get 1 to 2 anyway. So if a lot of them get 1 to 2 anyway, and I think that this is in a perfect area for it, then I'm going to take it. So 4 points. Um, I'm very happy with it. Um, and then here, this right here, I marked this just because the context looks pretty good. Um, so we just broke out. Most breakouts are going to fail. We push down and then we correct, and then this uptrend right here gets an overshoot. And a lot of times the overshoots can lead to a break, or they can also just lead to the channel stopping or playing out. A lot of times a overshoot will just play out the channel instead of it needing a new high. Especially when there's momentum in your direction, then you really want to pay attention to that. Like here at a reversal area, so just something to think about. Then here we bounce off of the overnight highs again. So 2 legs down to the overnight. We bounce 2 legs up. We start to reverse back again. We go below the EMA. We get a lower high. It's not a perfect area. It's not a perfect trade because it's kind of congestive. It's only a lower high. You might want to wait on a failed second entry. Um, so it's like the context area isn't that bad, but the setup isn't very good. So it's not really worth taking, but that's an important area. So now here we have 2 legs up. Then we have what's almost a failed second entry, almost a reversal pattern, because here first entry long, second entry long, failure, but it never ticks higher here. So either way, so that's a reversal area. Go down, we have an overshoot, leads to a break. Here I was attempting to go long here, um, because we're off of the overnight high, downtrend, break, new low, So the downtrend is played out. It's safe to look for longs. Then you get a long setup right off the overnight high, key entry point. Good signal bar for right here. You know, enter like that on the end of the red bar, or one tick above, 13 ticks. So, you know, anyway, I had a pretty good day today. Um, yeah, I really did. And I marked some other things. So yeah, with this 1 to 2 stuff, I mean, it's going really well. I mean, I'll keep updating y'all. I'm just trying it out, basically, because I know that it works more often than I had thought. And so I'm being careful still, but, um, I'm still very cautious whenever I'm trading it. But anyway, hope y'all enjoyed the video. Hope you learned something, and I'll see you next time. Oh, and it's funny. It actually looks like there could have been a good trade here. I did not even notice it. So, um, let's see. So at the overnight high, that's a perfect area to fade or go short at, basically. We rush below the EMA and the overnight high, pull back, first entry long, second entry long, failure. So it's a reversal pattern um, from this uptrend playing out. Uptrend break, new high, and then reversal pattern. To get short with this bigger downtrend that's in play, because downtrend break, it still needs a new low. Um, and we get a failed second entry below the EMA and closing below the overnight low, or the overnight high, I mean. So I think that looks like a pretty good fade, actually. I think I'm going to mark that with an arrow. Oh yeah, actually I meant to mark this trade right here as well. Because it kind of does look pretty good. So anyway, that's it for the day. Hope you all enjoyed, and I'll see you next time.